Hello and welcome back to the GamesIndustry.biz Investment Summit online, sponsored by Xsola. This session is a panel entitled Exit Strategy, Being Acquired or Selling Your Studio. And again, if you want to ask any questions, please do so in the chat area of YouTube. And I'll ask some of those questions at the end. Okay, I'll now hand you over to the host of the panel from GamesIndustry.biz. You met him earlier, Chris Dring.
Hi, Jamie. Thank you for that. Sorry for having a video open just then. Welcome back. I'm Chris Dring. I'm the publisher of GamesIndustry.biz, and this session is for those business owners who are now looking to take the next step of selling their company. And we've got just the right people to provide the insight into doing just that. I'm delighted to welcome Debbie Bestwick, Team 17 CEO, MBE. Debbie is famous for releasing hit games from Worms to Overcooked, The Escapist to Moving Out. She has recent experience in acquiring studios, and of course, the company has gone public in the UK to much success. We also have Simon Iwanizak, the founder of Red Kite Games. The studio's been working on some major brands such as Dirt, God of War, and Call of Duty, and was acquired early this year by Sumo Digital. And we have Jens Hilgers. Jens is the founding general partner of Bitcraft Esports Ventures. He's the co-founder of esports team G2 Esports and CEO of esports data company BaZe. In 1997, he set up the esports platform Gamers.de, which he sold in 1999, and then founded ECL, which hopefully lots of people know, which was sold in 2015 to MTG. So three people with some unique insight in what it takes to successfully buy and sell companies. Welcome to the Investment Summit. Well, I mean, I don't know if you can answer this question first, but considering the state of the world right now, is now a good time to try and sell your business?
Absolutely. There is and it has been a lot of activity from public companies in particular over the last 18 months. There is definitely a desire and ambition from these companies to build and acquire as they scale up. In my opinion, there is plenty of support from investors regarding capital being raised, but equally many like ourselves have strong cash reserves to reinvest in the right opportunities.
Yeah, much to support that, I guess. I think a couple of factors are coming together. So I think sort of the last many years have sort of brought forward a much more diverse ecosystem in games, have allowed games developers, new studios to kind of create quality IP pretty effectively. And we have seen, I think, a number of successes of individual new studios creating new games. Not necessarily all of them making it to the second or third success, but I think sort of that's something that I think we could observe over the last years. Additionally, I think we see a bigger diversity of publishing platforms and kind of platforms that distribute games, and sort of new players entering the space, partly with sort of the cloud gaming approach now. And I think now, particularly in the last 2, 3, 4 months with the crisis, we have seen games companies in particular benefit from the corona or COVID crisis, as game time has been increasing, engagement with games has been increasing, essentially improving balance sheets of games companies quite significantly. And I think that sort of just helps with the overall environment whereof you have games companies, larger games companies that sit on an ever larger pile of cash, that do in a stronger position than probably ever before, helped and supported by this environment. And I do believe that that sets a pretty good background and backdrop for M&A activity. And just like Debbie said, I think we can see an increase in activity, and it is fundamentally a good time right now.
Yeah, I think I'd agree with both Debbie and Jens. I think maybe there's a little bit of a consideration of what kind of business you are trying to sell in respect to, if you are a successful business, obviously that's always puts you in a strong position when it comes to acquisition. If it's a sale because you're struggling, then maybe, yes, this time might put a bit of emphasis more on that than necessarily it would do. But I'm speculating there. A lot of, certainly my answers today will be based on just my experience with Red Kite. But I do think that certainly from what we're experiencing because of COVID-19 is a lot of positivity around and financially strong. that, and most games companies, whether it's publishing or internal original IP development or co-development like Red Kite do a lot of, is, our roadmap has been full for a very long time before COVID-19 even hit. So from a business point of view, if that's the kind of business then you're looking to sell, then it shouldn't really factor into the conversations that you're going to have with the potential buyer, because from that point of view, nothing's really changed.
I am. I just noticed in the chat, Shui Ishida is watching Debbie, and he says hello.
Hey, how are you?
Well, continuing on from that topic of conversation, what's the best sort of an ideal environment to sell a business in? That's a question.
Yeah, I think just to touch on the last part that Simon mentioned there, whether you are a successful business or whether you are a business that's actually struggling right now in COVID, I just want to highlight, quite recently we saw Studio Keywords in particular raised over 100 million to invest in acquisitions in services businesses. So there are companies raising finance for those. So don't think it's just successful companies. But relating to Chris's question regarding a good environment to sell a business in, truthfully, if you have a solid business with a proven track record of continuous delivery, growth, profit, and own IP, any time is a good time to sell a business. If you're not yet at profit, you'll need to show how the business is growing and future projections, and a strong case study why you should be acquired now instead of further down the line when you have a proven model. Otherwise, look for seed funding or other types of investment, if that helps.
Anyone else want to add to the environment?
I guess momentum, I'd call it, is always helpful. I think sort of momentum is probably one of the most important drivers behind what you're doing and the timing. Of course, agree with Debbie, profitability helps. There's a very simple formula looking at revenue and profits to kind of be able to determine what a company is potentially worth. But there might be companies where profitability might not have been the first sort of goal to begin with. There might be technical assets in that company that have a unique value, potentially even to the buyer, and you would not look at profits or potentially even revenues to begin with. And in situations like those, clear momentum helps a lot. Momentum in terms of adoption, momentum in terms of engagement and retention of customers, might that be consumers, might that be kind of business customers, whatever your business is there, is obviously very helpful. So kind of understanding where your momentum play is, understanding when that timing is, and understanding how to time your transaction according to that. Meaning, like, if you feel like something's going to happen that's going to be necessarily transformative in a positive sense, but that is helping you with momentum, like something that clearly shows and will make other people excited because certain metrics are going up. Again, might be financial metrics, might be kind of user and engagement-based metrics. Like, if you see that window and you can see when and how that plays out, then that's the point where you will kind of time your exit toward these parameters, if you look for an exit, and should plan around that. And then keep in mind that an exit process can take anything from like a month to 2 years, which was the case in sort of when I sold ESL, or the majority of the company in 2015. Our process took 2 years, not because it was difficult, just because we took the time to find the right buyer and find that compatibility that we thought was important. So kind of try to time that to the market and the potential buyer, and kind of increase the chances for success that way.
I think the only thing I'd add, Chris, is, what the question, the way that it's phrased, it almost makes you think that, are we talking about an external environment? But for me, the internal environment of the studio is a lot of what we're talking about here. It's kind of knowing, is it the right time for your studio to take that decision to jump and sell the business? And I think that generally the directors within a company will have a plan, they'll have a strategy, they'll know where they want to take the business, and the conversations that will happen is that either things will start to feel right, and internally you'll think it's a good decision for the business, or it'll feel wrong. So for me, I think it's quite an internal question for the people running the business, what they want to achieve and where they want to go. And as we've talked about, almost the external environment comes a little bit second, because it's quite clear that if you've got a business that's worth acquiring, there's going to be people out there that are going to want to acquire you.
Well,
Yeah.
Simon, I mean, what made you decide to sell when you did? What was it that made you think that made you feel the time was right?
So it's interesting with Red Kite. So we weren't looking to sell at all, and we weren't kind of putting ourselves out there as a development studio looking to be bought. It very much happened, as Jens was saying earlier. It's like, I think it was kind of almost critical mass, or the momentum of Red Kite over the 7 years previous of just doing really good work and building a reputation and delivering time and time again. And so the conversations came to us, and to be honest, it was a bit of a surprise for me, a nice surprise, of course, because it's quite flattering when you get those phone calls. And I'd never thought once about selling the business at that point. It was, for me, more a case of going, well, I like to learn. So having these conversations, whatever happens one way or another, is I'm going to come out the other side feeling like, well, I know what this process is. But then as the conversations happened, and obviously we inevitably were purchased by Sumo Digital, I think for us was that when I sat down and had, Red Kite have always had a very strong relationship with Sumo. We'd been working with them for over 4 years before we were actually acquired by them. So knowing the team that runs Sumo Digital very well, and being able to sit down and have a conversation. And for me, once I spelled out what we wanted to do over the next 3 years, and then listen to how Sumo Digital could help us achieve that, and then looking even further forward for what we could achieve together as Red Kite becoming part of the Sumo group, it just started to click and started to feel right. And that was essentially it. So it wasn't like there was a tick box exercise of what myself and my fellow directors wanted. It was more that we were talking to people that we knew well, that understood us, we knew how to work with. And then as we started to see what we could kind of achieve together, and the concerns melted away, it started to feel very natural as a progression for Red Kite Games. And I'm pleased to say that that's exactly the way that it's played out.
Oh, good. Jens, I'll ask you the same question then, because you've sold businesses. I mean, what made you decide to choose that? What made the times feel right for you?
So there was a bunch of reasons collectively. Number one, so it's at that point in time, that was 2013, when we sort of decided to want to sort of sell the business. I've been with the company for 13 years, a long time, right? More than a decade. And it was sort of, first of all, wanting to see a larger liquidity event as a founder. There's been kind of, and that's a recommendation for myself, I guess, as well, but try to kind of smartly integrate smaller secondary transactions for founders and your employees as you move forward with your companies, to reward them over time and keep them motivated. That's what we did with ESL as well. But like, here was the point where a larger event was desired for myself and co-founders. The second reason was that we had a number of investors in the company that were with the company for equally more than a decade, early stage angel investors, kind of smaller VC investors, and they were not of, let's say, strategic support anymore for the company, which had become kind of a 400 people sort of global entertainment company. And we didn't want to have sort of capital or equity on the cap table that would not be able to support the growth of the company going forward. So we wanted equity holders that were participating on the upside and motivated to be kind of helpful and supportive in the company, right? So that is kind of value add equity partners. So that was the second reason. The third reason is that we also understood that some of these investors wanted to see an exit. Like funds have lifetimes, like Bitcraft, just like many other funds, have a lifetime of 10 and maybe several years on top. And then you somehow need to see liquidation of your equity positions. And so was the situation here. So I think that was the combined reasons why we triggered the process. I think what sort of is so important and what we're touching here is really like, what is the objectives of a founder after selling the company, right? I mean, like the kind of deal where, while you sell your company and you're done, that's really like the smallest part of all deals that you see. To the biggest extent, the interest, particularly also in video games, of the buyer, and Debbie can certainly elaborate to that, is that the team stays on, right? Because we're a creative industry. Like the creative magic, of course, it's reflected in hopefully successful games or products such as those. But at the end of the day, it's here. It's in the key people's minds, and you want to keep those as long as possible. There's such a tremendous value to that. And like, now I'm talking more about studios rather than a company like ESL, which is sort of more like production tournament organizers and whatnot. Like, there's a little bit less of that creative kind of influence that you would see in a games company comparably. But you, like, a buyer will have a strong interest to keep you around, right? And then to retain you. And that is probably the most difficult part of the entire deal making. That gets easier when you kind of go about a deal the way that Simon did. You know the potential buyer for a long time before. That builds trust. That you will see, is there a culture fit? Because you're essentially just like you married people before with your investors, but this marriage here is like one that is much more important, because that partner is sitting in your cap table and he has the say. You know, like you're losing a certain level of control and oversight, and you want to make sure that these partners are the right partners for a very long time. If it's a deal, which is the majority of deals, where you stay kind of in the company for quite some time, and that's why it's so important to reflect on yourself. Like, what's my objective here, right? Like, do I want to stay around for longer? Do I want to partner with somebody who can elevate me, potentially even kind of with that, my remaining shares or kind of incentive scheme that I've set up with my new partner is elevating my value even further going forward, yeah? And kind of giving me more opportunity. And that needs to be figured out very, very carefully. And so here is where I think culture fit with the potential buyer is an incredibly important argument. And that is easier to find if you have fostered certain relationships over a longer time period and have worked with those already. It is a bit harder if you start just like a very structured M&A process where, like, okay, I go out there, I want to kind of achieve an objective in a year or less. And like, I probably have an M&A boutique as a support, but like, it's harder to just get to the depth of really getting to know the other side kind of well. And like, the statistic that was shocking to me when I started the M&A process in ESL was the boutique that we worked with. We had support, which I overall recommend. I think it's easy to kind of underestimate the work that is required to get this right. Like, this is a full-time job. Like, you can't just produce 3 new games while you're actually selling your company. It doesn't work, right? So kind of I think what the shocking number that I heard there is that the M&A boutiques, like in our history, like 60% of the actual M&A transactions that we did, the kind of expectation of what the incentive scheme that was put in place after the transaction would look like from the seller side didn't come together, because like people actually got into, like, there was misunderstandings, the business development different direction, which, I mean, that happens, right? Like, things go different ways. And if you don't have a mutual deep understanding and cultural fit, it's much more difficult to fix these things once you've sold your company and align again, right? So I think that's why culture fit, getting to know the other party, is so important. And that just takes a bit of time. Sorry, that was a long answer.
That's a good answer. Excellent. And I'm sure, Debbie, you can speak to that, can't you? In terms of, we and I have spoken about it a few times about that need to have a partner. That, and the fact is, I suspect that you staying on at Team 17 was quite a key part of when you went public and everything like that, right?
Yeah, absolutely. I think for me personally, Team 17 is 30 years old this year. You know, and I get asked all the time, you know, you're over 30 years in the games industry, what gets you out of bed in the morning? It's very simple. It's the passion for video games as a whole. That's what gets me out of bed. I love helping nurture new talent, bring new studios through, and building game franchises. But in a way, I think when I did the management buyout in 2011, I had a fairly fixed vision and focus of where I hoped we would get to. We actually looked at an IPO in 2013, but I decided we weren't ready at that time. And it was really, I think in 2016, we sold a minority stake to private equity. And that was predominantly to test ourselves, to see how we'd cope. Jens talked about the financial side, and, you know, I always say to people, remember, when people buy your company, they're buying future success, as long as alongside historical success. So it's really key you get that balance right. And for us, I wanted to test how I would manage in a boardroom environment with financial people asking me questions that I wasn't used to, and to see how I'd cope. And I think it was late 2017 when we finally knew that we were ready, but we still weren't completely certain about what the future, which path we would go down. And we'd had many inbound inquiries about whether we were looking to sell the business, but we were on I still say we're at the start of our journey even today. And what came into our thinking regarding why we floated, it was predominantly to build the kind of company that we believe we can build within the games industry. Predominantly being a listed company gives us independence over the games we create, the studios we work with. Very, very, very important for me in particular. It allows every person who works with Team 17, who's employed by Team 17, to be a shareholder in our company. And when you consider at that time, this refers a little bit to Chris's question about when is a good time again. At that time, Brexit was a big deal, and we were being warned, about the implications on IPOs, and how difficult it could be. But we believed we had an incredibly solid business with a very clear growth strategy. And when you consider we've actually excelled, I know Chris touched about how well we've done since float, but when I remind people, we floated at £1.65 a share and trebled that within 19 months of float. That's an incredible performance for any company in any sector. And we oversubscribed when we floated by close to 4 times 2 years ago, which, as I said, goes back to that earlier point of when is a good time. If you have a great business and you are prepared, I know there'll be questions about what you need to get prepared later on, so I don't really want to jump into that area, but you have to be incredibly focused. Distractions, yes, it's a huge distraction to your business. Anybody who's heard me talk on this before, I've said you absolutely have to dedicate somebody within your senior management exec team to manage this process. It cannot distract you from what you are selling to an exit, as a part of an exit, which is usually your future revenues, future profits, the games that you're making, if you start to derail, it could cost you money in terms of any earnouts. You could see that you're having to change numbers during due diligence, which doesn't give the buyer confidence, so it's vitally important that you really do get that distraction area covered by focusing on a key individual within your company. And it doesn't matter whether you've got financial advisors, and many other advisors that are around you at that time. You really need a key pin person internally that communications run through, so that it allows you to keep focused. Our IPO is a great example of, from the day that we said we're going to do this to the day that we wrapped it up, took 91 days in total. That is phenomenally fast for an IPO, if that helps.
Mm. Well, you talk about the process a little bit there, but let's just talk. So you've got a buyer, somebody's interested, they're going to ask loads of questions, but what sort of questions should people be expected to answer from prospective buyers?
Everything. I think the number one question, and again, it comes down to many things that many people will be asked. The number one question is, why do you want to sell? If your business is such a great business, why do you want to sell now? So be prepared to answer lots of tricky questions. There are an awful lot of companies for sale, no matter what you believe. So make sure you explain what makes you different to your peers if you want to get those higher multiples. And honestly, please don't laugh. If you're taking a huge amount of money off the table, Jens talked about diversification of his personal wealth a little bit and taking some equity. I did similar at IPO. You will get asked every single question you can possibly imagine about what you are doing. Buyers want to know you are here for a journey and will ask some of the most personal questions you can imagine, and alongside every bit of detail about the business. So honestly, be prepared to share everything, and don't have skeletons in cupboards and thinking they may come out later in due diligence. Bring them at the forefront, deal with them up front, and show honesty.
I think like generally, like I guess a lot of the companies that would be selling have been taking in some sort of venture capital before they would go out and sell. Now, those that have been going through the process of kind of getting venture capital into their company sort of have seen sort of diligence from new investors. I'd see so sort of they have seen people kind of trying to understand their business holistically at a certain level of sophistication. And I think as your business matures, more time of people that are buying equity in your company and getting exposed to your company for the longer term, the questions will shift more to sort of legal, tax, and financial. While the earlier your company still is and investors invest in, more is about sort of team, product, kind of vision, like softer sort of vantage points, I'd say. So as you mature, and particularly then with selling the majority to a potential buyer, like the diligence on legal, on tax, on financials will get ever stronger, understandably, because somebody kind of is taking sort of control into its hands, is taking responsibility to its hands, and wants to make sure that sort of everything is fine. And a buyer will ever so stronger if you sell a majority of the business, want an increasing number of guarantees and representations from you, with an increasing sort of penalty to violating those, right? I mean, if you sell your business and what you're representing here and what we find, like, make sure that that's the way, and please kind of tell us that if you violate any of what you represent here, that if that's wrong, and you're telling us today it's not, then there's going to be penalties, and these can be expensive. That's again why sort of anything that's problematic about the business, and everybody has something that didn't really go straightforward. Like there's no company that's just as clean as the founding documents, right? So there's that employee that you had trouble with. There's sort of that, I don't know, picture that somebody once said it's mine. Like there's always something. I just put it up front, just like Debbie says, put it in a data room, make it well documented so that it doesn't pop up later, because it will give people concerns. Like, what else is there? Like, do we have to dig deeper? And that's just a bad way to sort of end up in the last stretches of a conversation. Like, try to surface these things early on, creates trust, kind of, and it will make the entire process more easy after all.
Simon, did you have any questions you get asked you weren't expecting?
I wouldn't say not expected to be asked. I mean, for me, Red Kite was and continues to be a very organised and clean and straightforward business. I mean, to start off with, I mean, I built Red Kite with my own savings. We never took any investment in. The structure of the business was very straightforward. I always had a mentality of knowing where I wanted to take Red Kite. So from day one, always built it to be organised as though it was a bigger business and going to do more than it originally set out to do. But I would say that didn't, it might have done, but it was, you know, I've only got one frame of reference here. It didn't make the process any less kind of stressful or any less intrusive in terms of questions, I don't think. You know, a lot of it was obviously focusing around, for us, it was studio culture, maintaining our brand and our own identity. There was questions, you know, going, you know, every question you can imagine under the sun from a finance point of view, which is completely understandable. But then very much, again, as I touched upon in, I think the last question was, well, what does Red Kite want to achieve in the next 3 to 5 years? And what's potentially going to stop you doing that? What's potentially going to help you do that? How would you do it if this acquisition didn't happen? So just lots and lots of questions. I think we benefited again from that relationship where I was able to sit around a table with lots of people that I knew and just have very, you know, honest conversations about these things. So, you know, I think from the questions point of view is the more that you have that mentality, I feel that certainly I had with Red Kite at the start, which is just keeping your house in order at every turn, just means that, you know, if these conversations do eventually happen, you're gonna be a more attractive business to a potential publisher or company coming in to acquire you, because, you know, ultimately that's how they're going to want you then to run your business once they bring you on board, if you weren't doing it before. So if they see that you have that approach and that mentality, I think it's ultimately going to help and be it's going to breed a lot more confidence, just in and around you, your leadership, the leadership team you've got, and your ability to come on and actually deliver what you've both set out on the table to try and do.
We actually have a question in the chat from analyst extraordinaire Nick Parker, and I thought I'd throw it in at this point. What would be the practical and moral earnout period expectation for officers? Should CEOs be impatient to get out and start something new?
Wow, big question, Nick. Look, it's a hard one for me because, you know, I mean, I'm 30 years in Team 17, you know, and I think everybody knows I don't get it going to work to pick up a paycheck anymore. I do it for the passion and the love of what I'm doing. I think if you're, you know, it's what let me turn it a little bit. The CEO is really important, okay? But equally, and maybe even more so important, is the actual senior management team in any acquisition that you're doing. They are the people, depending on the type of acquisition that you're doing, you know, some will embed straight into the group company. Others may run as an independent subsidiary. If they're running as an independent subsidiary, the management and the CEO are crucial. And, you know, realistically, you've got to be looking for a minimum of 2 to 3 years, you know. If they're coming into the business and it fits within what you do on a day-to-day basis, you know, I'd still like, personally, I like people on our journey as we grow. So I don't think I'd be overly keen if somebody walked through the door and said, actually, I'm looking to sell my business. I'm the CEO and the founder, or I'm the lead creative vision holder of this IP, and I want to leave within 12 months. You know, you're losing a big chunk of that value. So I would think minimum has to be around 2 to 3 years.
Does Simon and Jens agree?
Well, I think it touches a little bit on Debbie, although I know it is still very different. But when the decision was made to sell Red Kite, it was about starting a new and our next adventure. It wasn't in any way in our mind that we were going to want to exit or go out. I mean, it's a funny thing to say, but I still treat every single person at Red Kite, and I treat Red Kite as though it is still mine. And I think that is, you know, I think that's a really positive thing just for Red Kite going forward anyway. But, you know, it never crossed our minds of, well, how are we exiting from this at all, really? Exit wasn't a word we were using. It was very much next adventure, what we're going to achieve next, what, you know, a new exciting chapter. So I think that, and you know, and if you approach the acquisition, the conversations that way as well, that doesn't mean that you need to, over a period of say 2 to 3 years, try and kind of from a financial point of view, kind of benefit as best you can as say the original shareholders or things like that. Because once you know you want to be in it for the longer game, is that, you know, you can set longer term goals, and you can you know, really look to build to the future. So, you know, I think that you can do both in that respect. But you know, I think it's very, very different if a business is looking to sell and the leadership team are looking to exit, to a business that's looking to sell and the leadership team want to stick around because they love who they're working with, they love what they're doing, and they just want to partner with someone that's going to hopefully enhance all of that. I think from my opinion would be that, you know, those two things as a potential acquisition are very, very different.
Yeah. So I guess I have 3 points. Like, number one, I think sort of the 2 or 3 years are probably the average of sort of lockup period that you would see in your average sort of acquisition. Number two, I believe, coming back to my point of culture, it is just so important to understand sort of what is that company that is the acquirer sort of having as sort of the overall corporate culture. Are they sort of a more in control, sort of more like want to know and be informed and be having a say kind of company? Or are they a company that kind of inspires or sort of wants to kind of instill a setup whereof there is individual satellites that could be acquired companies, and they should go after their stuff, right? They have their they have to have reporting to the group, but other than that, like, go for your stuff. So understanding what that culture is on the other side will tell you, like, how could somebody look at wanting to integrate you in the future, and how might he react to certain developments. And I think lastly, I think if somebody wants to get out, he can sell, but he needs to know that fundamentally it's just going to have an impact on valuation. That's it. Like, I mean, like, if you buy a company with leadership and with the commitment behind it, it will give you as a buyer more confidence on somebody actually believes in the upside. Like, and if somebody says like, well, I just want to get out, like, it will probably make you like, okay, he probably doesn't believe he can do it again or add much more value, and kind of he will not really want to support me in the setup. Like, it's just going to hurt valuation, right? I mean, you will get what you sell. If you don't sell yourself and if you don't commit yourself, it's going to be a smaller valuation after all. But there's still companies that might just be happy to buy that IP you created with a team on that IP because it fits to their portfolio. That's perfectly fine, right? It's just a different setup.
Debbie, I mean, you've been acquiring studios and you've been looking into it. I mean, what do you look for when picking up talent or developers?
Yeah, I think 3 areas. So I'll try and do them in separate. Acquisition targets for us fall predominantly into 3 areas. One is additional studio capacity and resources. So that's acquiring other development studios that will give us more access to talent in certain regions. I think UP was a great example of that. What we looked for with UP was they were in the region that we were looking for. I'd known the team a very long time, I think over 20 plus years, not worked with them apart from over the last 12 months, but I've known the owner and the founder and the management team for a long time. We looked at the team skill set. What we found, what we were looking for is skill sets quite agile and adaptable. What UP had is they were very agile in terms of multi-skills regarding different gaming engines. They weren't just Unreal, they were Unity, they were also C++. They've worked in games in many different genres, which showed their flexibility to move from different game genres. They've also created own successful IP on mobile that they've done as well, and they believe, and there was everybody's talked today about how the relationship is with the people that are acquiring you. We shared our strategy, we share our vision with them, and they bought into that. The founders there, our shareholders within Team 17, they're on our journey with us. Yes, sure, they took some money off the table, but they're part of the future growth in the business, and that was important. So that's one area. The second area, we acquired Moldy Tooth on the Escapist franchise in 2016. Now, this was a very small indie developer who'd had phenomenal success with their launch title. We had a conversation regarding building the game into a franchise and the work and the investment that would be needed into a franchise. And Chris, who was the founder, he was like, look, would you be interested in acquiring? I want to still remain part of the journey. But to level up, to build that into a franchise, it's going to need significant investment. It's going to need a much larger team than he could deliver. And so what we did with Chris, for instance, is we acquired his business. He took a large part of cash. He took a large part in shares. He's a shareholder still today on this journey with us. And what we did there is we not only acquired his business, we put investment into the future growth potential of where that IP could go. And so that was quite a unique situation. And there's a lot of those opportunities that happen. And I think the last part, which is where it's kind of not so much for the smaller studios, it's actually for larger businesses, where we look for companies that we feel will fit well within the group company. And that's the PLC group company, not just Team 17. And so that opens up a different world, which is like-minded businesses that are looking to be part of a large group to scale up faster and grow the long-term potential. And that is again where the management team is really, really important to us. But we do, very importantly for us, is always, you know, whatever way we look at how friendly and how wonderful it is, people are acquiring your business to grow their own business. So it is about finances, it is about profitability, it is about the growth potential, whether it's people, resources, scaling them up, or whether it's a business that's just growing. So it is very important that they have solid track records at that larger scale, that they show, you know, the future outlook. The management team, as everybody has said, is absolutely critical if they're running independent within a group, you know, and so that's just a flavor of some of the things that we look for.
Mm-hmm. Well, I mean, it's sort of the same question in a way, but this is for the whole panel. But what do developers need to have, do you think, to be most attractive to buyers? What is it that makes them, that's going to make them, we must buy them?
I think a lot of this has been answered. I mean, everybody's going to have different thoughts in terms of it. You know, the way that I think the two most important things, management team people, you know, talent, success, that absolutely, you know, ideally it's a team that's been with you on a journey. Simon shared about his team that have been with him on a journey. You know, that will have been a key part of what Sumo were looking for in terms of the management team, you know, and we all look at along that side, but equally, you know, a proven strong track record, that's what makes you really attractive. You know, if you want, and by the way, I'm not talking like, you know, if I'm talking the higher multiples that get talked about on acquisitions in our industry, not necessarily the service side of things. So you do need to have everything in line in terms of historical success, financial, you know, financial due diligence, commercial due diligence, and legal due diligence will all be words you never want to talk about post a transaction, but you need to have them ready, and you really need to sell not only the business vision, but the management team. That management team having equity within your current business and being on board for that journey really does lift up those valuations.
I think something that was applicable to Red Kite again was some of the partners that we had worked with and were working with. Again, as a studio of our size, I think we were around about 26 people or something like that when we were acquired, and we've grown since then. But for the fact of having, you know, worked on some quite big titles, some quite big IPs and franchises, and as Debbie said, had that track record built as a part of that, was I think that certainly helped when looking into Red Kite and going, well, where can these guys go? What can they actually achieve? Because we were having big impacts on big, you know, we were having, you know, noticeable impacts on big games, even though we were a small team. So clearly that then helps with the idea of delivery and confidence. I think something as well is that if you're sat there having these conversations, and you know, Red Kite certainly from the, you know, the work for hire co-development side of business, which is again a little different to original IP and things like that, was that when we, you know, if you're sat there and you can see that you're busy for a very long period of time, then, you know, again, that puts you at a very strong position at the table as well to go, well, you know, this is where we are now, and we're forecasting already to be here at this point and further down the line. So I think that, again, that can help with, you know, making those numbers go higher than lower, because not only are you profitable, have you got money in the bank, have you got great partners and a great team, is that you've also got this roadmap ahead of you anyway, which, you know, with the help of bringing an acquisition partner in, and certainly, you know, the likes of the size of Sumo for us, was that, well, you know, things are only going to get better from that point. So I think that kind of cauldron of items there was definitely something that I think can help with what can be helpful or needed with going into an acquisition. Certainly was for us.
I noticed there's a couple more questions in the channel. We don't have much time to get through any, or maybe one of them. One's from Ross Bodfoot. Looking at the private UK companies out there at the moment, who particularly stands out?
I'd be very biased if I answered that question, right? And so would Simon. Can I just say, I think all the listed companies are different to each other in different ways. And, you know, they are all incredibly supportive of each other on their journeys as well. You know, Carl at Sumo, David at Frontier, Andrew at Keywords, you know, Frank at Codemasters. We are supportive of each other, and I think we all differ in different ways, you know. And actually, I think what we have right now on the market is a great portfolio of UK owned companies that are showing just what the games industry potential could be. So that's my hopefully covering all of them and not answering the question and doing the politically correct thing.
Yeah, I think that the more important question in a way is, or another way of looking at it, I should say, is, you know, it's not necessarily about who's the most attractive out there. It's like, well, what's the most attractive to you? They are different. It's like, where is it you want to go? What is it you want to achieve? Because you can do that with some, and you won't be doing that with others because that won't fit in with their strategy. So again, I think it's more about understanding what it is that you want to do and identifying the right potential partner to go with. Yeah, I've not given anything away either. But
just be polite. Look, no, and it is genuinely true. I mean, you're all in the games industry. You know how friendly an industry this is. Trust me, the listed companies are just as friendly with each other and supportive of each other.
Well, I mean, I did have other questions. There is another question in the chat, which seems very technical. So if anyone wants to jump in and answer Philip Dowell's question about EBITDA, then please do. But we are out of time because Jamie will having a heart attack. He's about to interview Ian Livingston on our next chat. Jamie, do you want to do the honors?
Yeah, sure. Thanks again, Chris. Really interesting. And to Debbie, Simon and Jens too. That was brilliant. Yes, our next talk session at the Investment Summit Online is with myself, interviewing angel investor, co-founder of Games Workshop, and industry legend Ian Livingston, CBE, at 12 midday. That's UK time. You can find the link to this talk on investmentsummit.gamesindustry.biz. And that's it for this session. So